Finally, folks, I do have some real good news that may actually push us a little bit higher than we are sitting right now, around $14.50 a share. It's about what has been happening in the market lately, linked to what is happening outside with everything else. I'm talking about inflation, I'm talking about the Federal Reserve actions, and I'm talking about the Russia war, all right? So there is an indicator, all right? There is an indicator on the markets. When you look at what we call moving averages, these are lines that, we usually see on graphs, but these are indicators that are actually here to point you towards what the market has been doing in the past, and use that in order to actually get a little bit of forecast of what may happen in the near future. And when you use that technical analysis alongside the fundamental analysis, all right, of what is actually happening in real life, usually you have a pretty good tools to actually predict the future and, make a move in order to position yourself to make more money in the next future, right? So when it comes to the market as a whole, the S&P 500 rebounding today already, actually signifies that the S&P 500 just hit what we call a death cross, right? This is, again, a technical analysis combination of moving averages crossing together, but it is a bullish sign. We can usually if you zoom out on the S&P 500 chart, you can also use the SPY as an ETF to actually follow what the market is doing. If you look at today, we gained 2%, which is good. It's rebounding from the sell-off we had yesterday, but we have so many sell-off in the last 6 months, especially the last 3 months since January, that when you look at it, well, it seems as if there is a little bit of a rebound happening, but there has been so much attempt to rebound in the last month, the last 4 or 6 weeks, especially since the war in Russia started. All right. So my point is, when you look at this death cross definition and what it means for the market, usually the index can remain in a death cross for some time, but the average period is 155 trading days. But the gains do materialize after there is this death cross signifying and materializing itself. The last time the index closed in death cross territory was March 30th of 2020, when it felt like the sky was falling as the pandemic set in. From that point, the index gained more than 55% the following year. 55%. The point is that at some point, the macroeconomic risk that sends stocks lower becomes fully reflected in their prices. And as long as corporate earnings are still growing, stock will resume rising at some point. So lately, since pretty much the last 3 months, have been telling you guys that if you look at the share price of AMC, usually we will be up when the markets are up, and we will be down when the markets are down, because AMC is part of the Russell 2000 and is the biggest holding of the Russell 2000. So if the Russell gains, high chances are AMC will gain. If the Russell drops like yesterday, high chances are AMC will drop. But the thing is, AMC is already a highly shorted stocks. All right? The short sellers have been using all the shares available to short. So it's easier on red days for the stock to plummet and go to the floor like we saw yesterday. But the fact that there is also this correlation with the market means, if by looking at the significance of the death cross being, materializing here, it means on the next few days, especially if war is to end by May, it will mean that inflation will go down a little bit, as we already saw coming with an upcoming report today that signifies that inflation, when you remove food and energy out of it, well, it is kind of signifying that it is starting to at least flat a little bit before starting to go back down. So it means when you add when you add what is happening on real world and technical analysis, it means, well, in other words, crises are not here, or downtrend are not here to stay. The market evolves as a cycle. So anytime we will have a downturn like we are already seeing on AMC, especially if it follows the market trend, Well, if the markets are now at a point where it makes sense for any investor to actually start buying again because the risks are already priced in, the valuations, meaning they already kind of know that, well, based on where we are right now, it's too cheap not to buy these stocks, all right, or to put your money to work in the stock market. So when that happens, ultimately, if the trends remain intact with AMC, it can start also following the market back up again, maybe reaching back to, I don't know, 20, 25, 30 bucks a share. But it gets even more interesting for AMC because it is a very volatile stock, all right? So as it starts to regain momentum, it will attract a lot more people, the day traders, the swing traders, and it will give a sentiment, a much more positive sentiment to people who were actually desperate of anything happening here, all right? So this is actually a good news for us because, hey, it means that we might see the bottom here very, very soon. Now, that doesn't mean we may not see 12 or we may not see 10, but at least this is temporary. And the light at the end of the tunnel is really, really close. All right. So that's it.